Hello and welcome. 2014 promises to be an interesting year for many reasons, for companies who are doing business with India, in India, and Indian companies doing business with the rest of the world. But to understand how this will all shape out, one has to understand the global mega trends that's going to really drive the economics and politics of it. So let's focus on the economics, as I'm joined by Professor Anil Gupta from the University of Maryland. He happens to be the Michael Dingman Chair of Strategy and Leadership and at the Robert H. Smith School of Business. Professor, thank you very much for speaking with us. So let me ask you very broadly, since I am sitting in India, from an India point of view, how do you see India evolving as a country to do business with? Do you sense the positive, is there a sense of positiveness first, to start with?
Yeah, I think, right now, as we know, emerging economies around the world are in difficulty, and it's primarily has to do with two big factors. One is the U.S. Federal Reserve is going to start tightening up the easy money policies. And second, of course, internal governance challenges across the world. Having said that, the Indian economy, for at least some reasons, despite all the challenges that we know, is better placed right now than most of the other economies. For example, if you look at India as compared to Brazil, to Russia, among the BRICS, India is much better placed. China, of course, is growing faster, but China also faces major challenges. So I think that as the multinational companies look at where to put their money, or as institutional investors look at where to put their money, that despite all the turmoil, India is one of the best destinations.
Right. So if we were to look at some of the large corporations in markets like the United States or Europe, what is the current mood? Would you say that they are at this point looking to expand further? Are they looking at more verticals? Are they looking at taking either businesses or some of their divisions to countries like India?
Yes, absolutely. Because if you look at the multinationals, the figures are that, say, U.S. multinationals are sitting on about $2 trillion of cash within the U.S., and that's cash, and $2 trillion of cash outside the U.S. And obviously, that's money looking to be invested. And if you look at U.S., Europe, Japan, the major developed economies, they are still, slow growth economies. U.S. is going to do quite well, but okay, so around 3%. But then if you look at Japan, we look at Europe, they'll be lucky if they grow at 1%. So clearly, for the multinationals, growth opportunities outside of the U.S. are really in emerging economies. And among the emerging economies, India, along with China, remains among the big economies, two of the best destinations.
Do you feel that while there is $4 trillion of cash available with many of these large corporations, how would you rate the propensity of these companies to actually deploy that cash?
Yeah, I think the companies that deploy that cash will be across the board, and it will be much more in the case of companies whose industries are fundamentally global, be that in the auto sector, in electronics sector, as just some examples. But also, I look at retail companies like Walmart and so on. So I think that the companies that are looking to invest cash, capital goods, machinery, ABB, Siemens, all of them are looking for opportunities in growth markets. But obviously, investors don't like uncertainty, both political uncertainty and policy uncertainty, and they like a business-friendly government. And if you look at India right now, basically multinationals are saying we're going to sit on the fence a little bit for 4 or 5 months. Elections are coming up, and let's see what happens with the elections. And when that uncertainty begins to, let's say, recede, that's when one can be hopeful that the multinationals would be rather eager to invest in India.
So you mentioned Walmart, and you also mentioned some of the engineering giants. Now, obviously, these two sets of investors have had different experiences in India. So Walmart clearly has had a problem, and with the rest of retail and foreign direct investment, while many of the engineering companies arguably have had a much smoother sailing for a much longer time. So does this play or will this play in future investments and maybe sort of differentiate the kinds of investments and the kind of companies will come in?
I think the reason I picked these two sets of companies because obviously the engineering companies their investment is driven very much by what happens on the infrastructure front, uh, and as long as we have a stable government, a strong government after the elections, I think I take it as a given, irrespective of which side comes to power, that infrastructure investment would begin to pick up, and that would be a major plus for the engineering side. But at the same time, if you look at from Walmart's point of view, that it's interesting that even though the on the retail side, Walmart ended the relationship with Party, that on the wholesale side, that Walmart actually, instead of walking away, uh, converted its share in best price from 50% to 100%. So I think whether it's the engineering giants or Walmart, if we have a stable government, if we have a business-friendly government, I would expect actually all of these players to become very eager to increase their investment in India.
Right. What are the broader trends that you're seeing, Professor, from a supply chain point of view? I mean, in the way products are being manufactured, parts being sourced, and the new markets for them, which may or may not be opening up.
Yes, so I think from supply chain point of view, obviously the multinational companies are have been and will continue to be very eager to reduce their or to actually increase their cost efficiency and reduce their cost structure as much as they can. Historically, on the manufacturing side, China has been the major source for outsourcing or offshoring of supply chain activities. China is now becoming increasingly expensive, both because labor costs are rising faster than GDP, faster than inflation, and also the Chinese currency is strengthening. And so, therefore, multinationals are absolutely keen to put not to put all of their supply chain eggs, if you will, in the China basket, and Vietnam, Indonesia, India, of course, from the U.S. side, Mexico, that these countries are emerging as attractive, let's say, supply chain destinations. And I think India, if India begins to get its infrastructure story right, because India also offers a huge domestic market. So therefore, from multinationals' point of view, putting their supply chain activities in India serves both purposes, and we can, the domestic market in India, as well as leveraging India for exports to other markets or back to the US. We can see that already happening in the automotive sector. But if we begin to get the infrastructure story going in earnestness, then we should expect India to become like a manufacturing power in the same way that China started to become a manufacturing power in the late 1990s.
Right. So infrastructure is the external factor, but when you look at companies themselves, what would you say are the competitive advantages or and disadvantages they have at this point when it comes to playing a role in this global marketplace and supply chain?
Yeah. So if you look at Indian companies and what are the strengths and weaknesses that they have on the global stage, I think Indian companies, I would say several. The number one I would start with, very strong in terms of their leadership and management capabilities. If I let's say use the as a way of communicating, if you could create a Jack Welch, the former CEO of GE, if we create a Jack Welch index of corporate leadership, that the large Indian corporates would come out across countries in the top 10 in the world. So I think the quality of leadership and management is very strong. In addition, just because of the nature of the Indian society and the nature of the Indian economic environment, that corporate leaders, it's in their DNA to be very comfortable with diversity, to be very comfortable with complexity, uncertainty, to be very comfortable dealing horizontally rather than just hierarchically. And of course, the fluency in the English language. All of that means that if we compare Indian companies to, let's say, multinationals or multinational aspirants from countries like China, for instance, that Indian companies have some major strengths. and they are well placed. Now, of course, they have to remember that just like we say to multinationals, don't come in with a haughty attitude and say that you know best. You have to remain open to local adaptation. You have to remain open to learning on the ground. And the same thing, of course, with Indian companies. Large Indian companies can be very proud, but they have to remember that all of the secrets of leadership or management or technology are not were not invented in India. That in other countries too, one has to adapt and one has to be open to learning on the ground. I say if I pick one area where Indian companies, I would say, compared to, let's say, Europeans or Japanese, South Koreans, Americans, are not as strong, would be in terms of R&D and technology. That Indian companies are very good at frugal engineering, at frugal innovation, but that's largely market-driven. But when it comes to innovation that's driven from the companies, from the corporate labs, yes, the Tatas are very strong. And TCS, we know the whole story about their strength in R&D. But outside of the Tatas, I would say even the major Indian corporates are not particularly strong on R&D and technology.
Right. So, last quick question, Professor. How do you see capital flows in this year, and where do you see that? Where do you see countries like India benefiting from it, if so?
So I think, of course, if you look at capital flows, clearly at the level of the governments, the money is going to start pulling back. But if you look at private sector, institutional investors, that yes, they will be investing in, say, the U.S. because the U.S. looks very promising this year. However, the amount of capital that is basically looking for investment destinations, the U.S. is not sufficient. So therefore, investors will remain very eager to look at emerging markets, and they would be looking for markets which offer a growth potential, which offer stability, relatively lower risk. And so if you look at and of course, that includes both currency risks as well as economic risks. And I think from that point of view, India is beginning to look more promising with the reforms that the government has started. It's extremely promising, the actions that Mr. Raghu Rajan, the RBI governor, has been taking. And if we end up with a business-friendly and relatively stable government after the elections, I think the second half of this year could look extremely promising for India as a destination for capital.
Right, and let's look forward to that. Thank you very much for speaking to us, Professor.
Thank you, Govind. Pleasure.